Daily bias is one of the most important but misunderstood concepts in all of Forex, and in this video I'm going to make it as simple as possible. And essentially what daily bias is, it's the higher time frame direction, and the higher time frame direction for me is the 4-hour and the daily, and also the weekly. But for daily bias, you don't really need the weekly chart, you just need the daily chart. And the key with daily bias is that you want to read price action. Now what does that mean by reading price action? It means, right, imagine if you were on the 5-minute chart, you would go and look and see, oh, have we respected order blocks? What liquidity targets are there? You want to do the exact same thing on the daily chart, right? The exact same thing on the daily chart. And the first thing I'm looking at is, you see this high, right? Now, instantly, my eyes gravitate towards highs and lows. So this high and this low, I know there's going to be lots of liquidity. And you can see this key high here. You see how we've wicked above it? You see how we've slightly wicked above it, and then we've instantly shot down. We've instantly displaced down, and we've left this huge fair value gap. Now, to me, and we've talked about this a lot on the channel, what this is a liquidity sweep, right? This right here is a liquidity sweep. The fact that we've wicked up and then instantly shot down, that tells me that that's a liquidity sweep. Okay, so why is that important? Why is the liquidity sweep important? Because it tells me price only went up here just to take out these stop loss orders, right? Just to take out that liquidity, and then we've instantly shot down. Now, and this is really important, I only know it's a liquidity sweep around this point, and especially at this point. Once this fair value gap's formed and we've instantly shot down, at that point, I know this is a liquidity sweep. Now, I don't know it's a liquidity sweep at this wick here, right? I don't know, because price could continue to do something like this, retrace down, and then continue to go up. I don't know it's a liquidity sweep, but the moment I see this huge displacement, and usually you want to see a fair value gap, not always, but if you see a massive fair value gap, that tells you that smart money is telling me that the daily order flow is bearish. Now what does that mean for you? It means I would only be looking for shorts, right? You only want to look for shorts. You've looked at the daily order flow, you've seen that we've had this little wick, this liquidity sweep, and then we've got this low here. Right, now why is this important? There was a fair value gap here. Let me mark this out. There was a bullish fair value gap right here, like that, right? And you can see how we respected it this time, the initial time. What you would expect if we were bullish is you would expect price to drop down, hit the fair value gap, and then instantly shoot off, right? Do you know how I talk about instant reaction? The exact same thing we saw here with this huge bearish movement. You would expect a huge bullish movement if you were bullish. If you were bullish. And the fact that we've disrespected this fair value gap, we've not even, there's no respect of it whatsoever. We've even wicked below it here. We've closed through it, and now we're closing into this order block. That tells me the daily order flow is bearish. So what does that mean? What does that actually mean? It means I'm only going to look for shorts, right? I'm only going to look for shorts. Okay, so once you've done this, you've got your daily bias. At this point, you want to look for targets. Now for me, instantly, my eyes are gravitating towards this low. See this low here? I know that there's lots of liquidity there. There is lots of liquidity there. And for me, that is my intraday or my higher time frame target. So intraday on the 5-minute, on the 15-minute, whatever entry you're looking for, I would only be going short, right? Because what you could see on the lower time frames is something like this. So displacement, retracement up, displacement, retracement up. And every retracement up, you want to be shorting, right? Sell the rallies. And this is your higher time frame target. This is your higher time frame target. And what you're going to do is we're just going to play a price action, and we're going to see what price does. Right? You see that? Instantly, the candle shoots right through it. It shoots right through that low. It leaves no respect of it. Now, there's two things, right, that can happen at this point. Because we've taken the higher time frame target, price could, wick through it and then almost do like a liquidity sweep, right? And shoot right up. Or we can, well, there's actually three things we could do. We could consolidate with little small candles like this, like that for ages. Or the third one, which is what we have now, is that we just continue going straight down. And if you look at this candle, right, does this huge candle, does that look like it's a bullish, like little liquidity sweep, a little wick like it is here? Or does it look like a tiny little candle and we might consolidate? Or does it look like we're clearly bearish? Right, hopefully it looks like we're clearly bearish. We're clearly bearish. And if you look really carefully on the daily chart, you've got this equal low here. So what that means is not only am I bearish, I've also got a target, a key intraday target. So I know going on, for the next few days, this is our high time frame target. And then if you just play price action again, like this, so you get a little doji. These little candles here, right? This is creating liquidity. This is creating liquidity, and it's giving the illusion to lots of people, because despite how we trade, lots of people still believe in support and resistance. And by that, I mean large funds. Large funds believe in support and resistance. So what they would expect is that they'd buy here and expect prices to shoot right up, right? They think it's going to bounce at this key low. Now, whoever engineers price, whether it's an algorithm or smart money, whatever you want to say, they're creating liquidity here with these little candles because it's giving the illusion that price is, bullish and we're going to start rallying up. And that's completely wrong. That's completely wrong. We're still bearish. And on the lower time frames, the 5 minute, 15 minute, whatever, at this point you just look for whatever entry you have. Right? You might like a fair value gap, you might like a liquidity sweep, and then a fair value gap. Whatever your entry is, whatever session you trade, just do it. We've got plenty of videos on the channel that you can look at. But yeah, at this point, it's so obvious that the higher time frame order flow is bearish, and you just want to keep riding price. So let's see what happens here. Look at that. So here you've got huge, strong displacement downwards, huge candle closing, and at this point, right here on this day, I would wait personally because you see this, like essentially all these red candles here, all these down close candles. This is an order block, right? So let me just mark this out. All of this is an order block, and for me personally, I want to see what price does, because there is a chance that price could wick straight off, right? We've taken out low, we've taken out another low, lots of liquidity has been taken, we've got an order block. I don't know. So personally, if I was a day trader or swing trader, I'm just going to wait for the next day. And if we see what happens, we play price action. Right, we get this strong wick through, Now for me, at this point, I'm quite confident that we're going to go for this low. Now why am I confident? You see, if this order block was very, let's say we were very bullish, right? And like this was just higher time frame retracement, like on the weekly and monthly, what would happen is that you see these bodies, the wick would not go below the bodies, right? The bodies of the order block is the power of it. So let me just mark out the bodies, right? See the bodies there? The wick should not go out the bodies, because the body of the order block is where smart money is actually accumulating. So it should not have left the order block. And for me, that's complete disrespect of the order block. We've got liquidity here, and we've also got quite a big fair value gap like this, right? Big fair value gap like this. But this is the imbalance that hasn't been, this right here is the imbalance that hasn't been filled. And this is for your notes, right? If you've got a low like this, and you've got a fair value gap underneath it, it almost always happens that price will come straight through the low and into the fair value gap. And who knows what could happen? We could consolidate for a bit and shoot off, or we could go down and continue down. And yeah, let's just play this price action and see what happens. Right, another doji, another candle here. We're very close to this low. People are going to start buying this because they think this is good, good support. And then let's play it and see what happens next. And like that, bam, straight through the low and into the fair value gap. And at this point, right? At this point, I'm not really sure because we've got this order block here. You see how we've got this order block here? You see how we've wicked into it and then we've instantly shot off? We've instantly shot off. That, to me, tells me that there's some underlying bullish nature to price action. And I'm not confident. I'm not confident in continuing to short euro because we've had a huge move down and we could retrace or we could consolidate. So let's see what happens. Right, so we have another strong down close candle. And where does this go? It goes into this order block here. And we've wicked into it and then we've gone off. And we've got this huge bullish candle. Now for me personally, let's just mark out this order block here. Again, I don't like how the bodies are kind of respecting the order block. Right, see how we've wicked into it a bit and then we've gone, it almost looks like we're going to go the other way. For me, I'm not confident to keep shorting. So, I'm not confident that we're going to go, that the price is going to keep going down. And I don't think we're bullish. So I'm going to sit on my hands and wait essentially. And that right there is discipline as a trader, which you've got to develop. Not every day you're going to know the bias. And it would be very wise for you just to wait for better confirmation. And let's just see what happens now. Oh, and it turns out it's live price action. So this is where we are currently in price action. So if you're watching this, on the 21st or whenever, just that I'm looking at the price action, what I would say, you see this fair value gap here. So if you really want to be a scalper, see this daily fair value gap there. It's not impossible, and it's probably fairly likely that price could tap this fair value gap. But is that a really high probability trade? Not really. But if you do see that on the lower time frames, that could be your entry. And again, I'm just reading the daily chart. You can do the exact same thing on the daily chart and the 4-hour chart. As long as you've got a 4-hour chart, a daily chart, you'll be alright. I normally like the 4-hour chart, but I want to show you that daily bias can be done on a daily chart. But if we just get out of FX replay and we go into the 4-hour chart like this, right? Again, so I'm actually a bit more confident now that I've seen this. You see this little high here, right? So we've got the daily fair value gap and we've got this high. And you know how I said when there's a low and a fair value gap at it, it's very likely to get smashed through. The exact same thing happens when you're on the other side, essentially. So if you've got a high and a fair value gap, very likely that we could retrace and go straight through it. So yeah, if you're an intraday trader, that's something that you might want to look at. But the higher time frame analysis is done on the 4-hour and the daily chart, right? And the higher time frame order flow, at least what we just analyzed, was bearish. And at this point, we're not sure. We're not sure. And yeah, that's essentially how you do daily bias, right? You just want to read the daily chart. You want to look at order blocks, are they getting respected? Look at fair value gaps, and then look at obvious liquidity on the daily and 4-hour chart. And yeah, like all things, it just takes practice. It just takes practice. Like, I'm just gonna, if you just look at this bit of price action here, what I'm seeing right away, you see this fair value gap here? See how price like kind of taps it and then instantly goes off? That to me confirms that we're very bullish. So if, let's say it was like the 5th of August, at this point I'd be looking for longs, right? Almost the opposite. I'd be targeting, what high have we got? We've got a high here, right? Or even this high all the way up there. And yeah, and look, if you look again, we've got another fair value gap here, like that. And you see how we've wicked into it and then we've instantly shot off. And again, another fair value gap and then we shoot off. To me, that tells me we're bullish. Bullish order flow, right? And yeah, and then if you look here, the disrespect of this fair value gap tells me that I'm not really sure, right? Because it's not really bearish, but it's not bullish at all because we've disrespected this fair value gap. And yeah, I know I've rumbled on a bit there, but that's how you determine daily bias. Make sure you read the daily chart, you read the 4-hour chart, understand what's actually going on, look for clear liquidity, look for fair value gaps, look for order blocks, and see what price actually does. Is it respecting fair value gaps? And if so, what side is it respecting? Because if it's respecting bullish fair value gaps, then you're bullish. If it's respecting bearish fair value gaps, then you're bearish. And this is key, if it respects both, because sometimes you'll see this, if it respects both, you're in a consolidating market, and do not trade that. Do not trade that, trust me, because sometimes you'll see it respects bullish and bearish, like order blocks, right? Like something like this. Let me just get this up. You'll see something like this. Let's say there's an order block. We'll just do this. So what you'll see is there's an order block here. It'll respect it. Another order block here. It'll respect it, and it'll go down, and then it'll just keep doing that. Fair value gap there that it respects. Order block here that it respects, and then it just keeps chopping around. So if you see that, just avoid it. But yeah, that's how you determine daily bias. It's like all things, it takes time. You just want to read the chart, read the 4-hour chart, read the daily chart. And yeah, if this video helped you, please like, subscribe, leave a comment for the algorithm, and yeah, I'll see you guys in the next video.